Hi, this is Chuck Oliver. Welcome to this week's Hidden Wealth Solution Review. Well, how about learning how to save $50,000 to $500,000 in 5 minutes? I'll try to do it in 2 to 3. Well, go to retirementprotected.com. That's retirementprotected.com and learn the concepts. I'm going to talk about tax credits and tax deductions. And I'm going to talk to you about 2 clients that we helped just towards the end of this last week. Not only that they each save $500,000 of unnecessary taxes, one did it by saving $500,000 in taxes off of their income. The other did it by creating more income by doing large Roth conversion and not having to pay the Roth conversion tax that they saved out of their pocket. $500,000 in 5 minutes, we were actually able to show these clients. Now, they had to learn, and it took a little bit more than 5 minutes, the concepts and the strategies, which I'll be teaching this Tuesday at retirementprotected.com. But here's what I want to teach you. Tax planning, right? Having a written retirement plan. And you deserve a written retirement plan that not only addresses taxation, inflation, legacy, but it's written and it talks about also wealth optimization. So by having CPAs on our team, CFPs on our team, chartered financial analysts on our team, we can build, not only undo unnecessary taxes, prevent unnecessary taxes, but keep unnecessary taxes out of the equation by earning potentially higher returns with less risk, but without the tax. And here's what we're experiencing right now. The philosophical difference between the administration that lost and the administration that won is very simple. Look at the track record. Well, one created 41-year high inflation and was bringing in all kinds of ways to spend by taxing. The other one's coming in and says, look, let's cut tax. Let's actually hire Elon Musk as our Secretary of Cost Cutting, and let's just get rid of the fraud and the waste and put that back into growing, obviously, our economy. But look at the big difference. The other administration evidently spent over $1 billion. They raised and spent over $1 billion. They now have a deficit of $20 million. That was just for a presidential campaign. Imagine how they would have wreaked havoc on the White House had they gotten in. Well, folks, this is the uncertainty of where does it go after the Trump's second term. But here's the big thing we're seeing from a number of you right now. It's the Trump bump, as you heard, right? The economy got this big jolt because of the proactive business acumen that Trump and his staff bring to the White House. And he's already obviously putting great people around him. And all of a sudden, we see these balances going up. But if you've not converted to Roth, you just are converting, you're actually deferring to pay higher tax to have to convert more. And that's what this client that's retiring next year said. He said, well, look, do I do this when I still have high income? And the answer is yes, because the cost of waiting has a cost calculation and it's going to be more tax. So by creating a tax deduction and a tax credit, using this to create their tax plan with the CPA team signing off on it, they were able to actually save $500,000 of taxes this year. 500 grand, imagine that they would have paid that they're getting to keep. 500,000 less of Washington's war on our wealth saved. And here's the good news. They also used another strategy that we're able to use with our tax team to go back and get $300,000 of taxes they paid in prior years back. All told, they're going to be basically getting back 300 and saving 500, which puts them in a position to now, between now and next year, have a tax plan that they will have the IRS out of their IRAs and Uncle Sam out of their inheritance assets. Well, that's one way to do it, folks, and we help a lot of people do that. So whether it's $50,000 or $500,000 or more, go to retirementprotected.com. That's retirementprotected.com. And even if you want to just get a head start to be tax and having a written retirement plan, to have a written comprehensive plan and be tax smart, we have people already scheduled in January. And they want to get this right, especially because we don't know what's going to change. We think there'll be less change with Trump getting back in. But with this debt and deficit, folks, and this high inflation that's going to be around for a while, this is key, because even if tax rates don't go up, taxes will go up because we have to pull out more because the high cost of living is more and the balance is more. You want to get the balance converted while it's here, before it goes to here, and before taxes are here, before they go to here. The timing is key. Last thing I'll leave you with is the client that's the business owner. We work with a lot of baby boomers and business owners and retirees, all three. They were giving up a third of their income annually to Uncle Sam. They basically had a 33% partner in their business, and they didn't know how to get rid of him. We got rid of him in 5 minutes by showing them a strategic tax plan and a well-written retirement plan that not only enables them to retire sooner, but keep more of what they've worked so hard to earn, and now put that back into their business, put it back towards their retirement, and put that where I'll teach you Tuesday, where it can never be taxed again without market losses and more return. Folks, you work hard for your money. Imagine tax planning isn't philosophical, it's financial. And learn how you can save 50 to 500K in 5 minutes by taking time to learn at retirementprotected.com. That's retirementprotected.com.